confidently verifying information and considering their own financial goal and risk tolerance. So we are going to start now without wasting any time. So today, right, our webinar topic is going to discuss about learning trading psychology with Pure Prime. As I mentioned just now, trading psychology as well as you able to control emotions should be considered as the most important thing during your trading journey, because even you have a top skill trading skill in the world, sometimes emotion come out, you cannot control yourself, and end up you might suffer a lot losses. I will deeply dive through the topic that we are going to discuss later. I really hope the webinar tonight will be able to help you understand what is the common trading psychology or common emotion that people are facing and what is the solution to it. I hope the psychology will able to link to your own emotion later. So yeah, so this is a key highlight that we are going to discuss today. So the first thing is the crucial role of the trading psychology. I think you guys already understand it. And then we will try to expand about the top 4 emotion or behavioral bias. To put in a simpler terms is what is the emotion bias that people might be suffering when they do their trading. So you can notice there will be some typical word like confirmation bias, representative bias, loss aversion, overconfidence bias. But I will talk through all the detail later. So I hope it can clarify to you guys. So no worries about this kind of difficult and professional psychology world. I will explain to it one by one to you guys. Okay, and then I will also explain what is the rewards of mastering the trading psychology. So at first, for new trader, I'm going to let you guys understand what is the trading psychology. So trading psychology is actually referred to the study and mastery of the emotional and psychological factor that influence a trader or investor decision process in financial market. It seems like a very difficult explanation, but I put it in a very simple way. So sometimes, right, when you gain your money and then you gain a lot of money, you cannot control your emotion and you are going to open a bigger and bigger positions and end up you might losing significant amount of money. This is a key thing. Even though before you trade, you already strategize a very good trading strategy for you already. You know what is a very good entry order, what is a very good stop loss order. Even though you fully understand what are you going to do before you trade, but end up when you are going to trading world and you look at the profit there, your profit and loss over there, the amount of the money keep moving, your emotions will come out and then you will end up make a lot of bad decisions. This is the importance of the trading psychology. So for today's topic, we are trying to reduce your emotions and let you understand what is the disadvantages for you in trading when you cannot control your emotion. Same with driving. If you guys have driving license, you drive in the roads and sometimes you met a lot of rude guy, and then if you cannot control emotion, it will lead to a very dangerous thing. Emotions are very important, not only your daily life, but also is as well as a trading thing is very important for a long-term journey. Okay, so in understanding trading philosophy, we're able to help you to recognizing and managing your emotion. So trying to let you have to prevent impulsive action, as I said just now, over trade, over open your position, and then you don't want to close your order. Okay, so this is a benefit of learning it. So now, without wasting any time, we're going to talk about the top 4 behavioral bias or the emotions that traders are always suffering from the trading world. Okay, the first thing is confirmation bias. So to put in a very simple terms, the definition of the confirmation bias is the tendency to seek out and prioritize information that confirms pre-existing belief while disregarding or undervalue contradictory data. Seems like very difficult explanation, but to put it in a very simple way, is sometimes, right, when you do certain trade, for example, you long go or maybe you long go. So imagine you long go, right? And then when your position is in a long order, you will only look at the news that support your long order already. You buy gold, then you just look all over the news that or any news that supporting you to buy gold, any good fundamental for us to buy gold. Your focus is only on positive side on the gold. You are going to ignore all the negative side, even though, right, suddenly there is a news come out that might be disadvantageous for the gold market, but this due to confirmation bias, you will just ignore it straightly. You just focus on what you want to see. You just focus on, since you buy gold, you just focus on the news that can support the gold price go up. It's not only gold, even though if you trade like crude oil, currency pair, same thing. Imagine if you are going to purchase pound sterling, or now the market is very bearish, maybe you can consider sell pound sterling GBP USD, right? And then all the news that you are going to look toward it is only focused on the negative news from the UK. You might be considered ignoring all the positive news that might be cause the possibility of the trend reversal. You just seek for all the information that can support on sell GBP USD only. So sometimes, right, if you have this kind of bias, it's very dangerous. So if you are only focused on positive and ignore the negative, but sometimes the negative impact of the news should be bigger. If you guys have experienced before, no matter how you think the currency or the products that you are trading is going to keep going up, no matter how you think like that. No, even you go through all the news, right? You see that all the news are supporting the price of the gold keep going up. Even though things like that, but sometimes you might also experience a significant loss because you need to try to imagine back. Do you also take the consideration that the negative thing? Do you take the consideration that do you take the negative information of the gold when you do your trading style? Even you buy gold, sometimes you might also look towards some negative news that might be balanced your trading strategy. It's not 100% sure in the trading market. So you shouldn't only focus on the thing that support your trading position and ignore all those things that violate the trading position. Okay, so you guys understand it. So a lot of people facing this kind of issue, I believe. So how can we solve this kind of issue? Okay, the first thing is you need to seek out information that challenge your existing belief. So even though you long gold order, right? For example, you buy gold, you need to find another proof that might be challenge your buy position. You need to seek out whether now gold is really good to buy, but anything that might be cause the gold price to go down. What things do I need to be careful in future? For example, as for now, why the gold price keep rising is mostly due to the rising geopolitical tension in the Middle East country. But there will be a chance for the gold market to drop back in future. There will be a chance like that. So what can cause the gold price to drop back? The things that we might focus maybe is regarding the Federal Reserve interest decisions or maybe the US economics data. So even though you are very confident that rising geopolitical tensions might cause investors to invest in safe haven, but you also need to bear in mind in this week, for example, we do have a lot of important US economics data. And then you can also notice on yesterday, US is actually released a lot of positive data, including their manufacturing data. So this is the reason that caused the gold price, the dollar go up, and then the reason that caused the gold price drop aggressively yesterday. But end up it rebound back due to technical corrections. Now, as for now, it's not only the things, the Middle East tension that you must focus on it. You can also focus on other things. Like, for example, if this week, the PCE, the price consumer index data, the PCE data from the United States, provides a better than expectation reading. The initial general spend from the US data give another positive reading. This is the thing that might be cause the gold price to drop back. So you cannot just focus on one news. You need to find other things that might be contradict your opinion, your position. So it might be prevent you from over trading. Because if you think, oh, the news only focus on gold buy, then you are going to open a very huge position for you to purchase gold. So this is the thing that a lot of traders must be careful on it. You need to be subjective. You need to be, how to say, you need to make a balance, not only focus on the good news. Sometimes negative news or maybe some news that can contradict your opinion are very good, for example, also. Okay, so this is the thing. Seek out information that challenge your existing belief and then look for corroborating supports for investment decision. For example, even though I might saying that gold might, for example, yes, not 100%. Even though I might say that the gold market should be very positive now due to some Middle East tension thing, but you need to seek for another analyst support. You need to see whether a lot of analysts support this kind of view or anything that let me, because I'm not 100% correct, I can guarantee you. So you need to seek for more and more information to challenge my belief also, or also challenge yourself belief. So even though you look at a very good analyst, they're saying that gold is very good buy as for now, but it's really not the 100% thing. You need to try to understand more analyst opinion, see what is the opinion towards gold, whether the majority is supporting gold buy, or why is the minority analyst that support the gold might be dropped back. So you need to look on more analysis. Not 100% trust me also. Like I give you the webinar tonight, right? You cannot also 100% trust me. The information I give is 100% correct. You need to find some challenge to challenge me back. So this is how we solve the confirmation bias. Anything that you think is right, you need to find something that can challenge your point of view so that you are not going to over trade, like open your positions too confidently, and then you end up losing the money. Okay, I think a lot of people might experience this kind of thing before. So do some trade and then keep looking at the news that positive for your trade. Like for example, you sell pound, then you keep looking the news that negative for pound. UK economics data become negative or what? You looking the news like that only, but you just ignore the things that might be contradict the view and then cause the pound to rebound back. So you need to be careful on it. So yeah, this is the first thing, bias. I hope you guys can relate to it. And then the second thing is regarding the representative bias. So representative bias is very simple. For example, sometimes trader might be just trade after the economics data release. For example, previously, once a non-farm payroll data release, gold drop aggressively, and then a lot of investors trying to sell gold. They just use the non-farm payroll as a solely the one thing to do to make your trading decision. Like after the NFP release, right? And there will be a chance for gold to drop if the NFP provides a positive reading. But you cannot only use one news or one data to justify whether the gold is going to drop a lot or not. There will be a chance that the gold market might be dropped a little bit, maybe a little bit. This is the times when the non-farm payroll on September to be released. So after the non-farm payroll release, like the gold price is actually dropped, but end up it start to rebound aggressively. So if you are going to have the representative bias, right, you only focus on the non-farm payroll thing, and then you based on your past experience, you're thinking that, oh, non-farm payroll is very, very bad, very good, then gold price is going to drop. If you base on this kind of past experience, you might suffer a lot of losses. So one data or one economics things, once update is are not able to let you or help you to justify a very, very long-term outlook on certain product. Or maybe you can just justify in just 1 hour charts or maybe even 30-minute chart, because market link will touch a lot of different kind of things. For example, last time non-farm payroll positive, gold price drop, but end up why is rebound aggressively? It rebound aggressively. Why? It's mostly due to the rising geopolitical tension. So you need to digest on it. So you need to digest on it and then hope it can help you to build your trading strategy more in future. Okay, so it's just not the first-hand data that you just use the data and do trading. You need to understand few things. Not the new data is the best. You need to seek for more and more several data. So this is representative bias. And then, so what is the consequences is trader might form a view or forecast primarily based on just one or limited data only. For example, just focus on non-farm payroll but ignore other things, is going to cause you a significant losses. This is a very good example previously. Okay, so you only focus on small thing, it will be not good and not accurate for you to have a good trading strategy in future. So how to solve this kind of issue? How to solve representative bias? So you need to stay vigilant about potential statistical error. To put in a very simple way, to understand is like sometimes even though the data release or the statistic release, you cannot 100% justify that this statistic is 100% correct and it's not going to violate the market point of view. So you need to stay in mind, you need to challenge the statistic. How you so sure that the statistic is very correct? Like how you sure that even the non-farm payroll is positive? It means that the US economy is very, very positive. How can you sure about it? No, right? So you need to challenge it. It's not just like you go through others, analysts or people who give you a webinar. He said that non-farm payroll is the best strategy to trade. If you trade with non-farm payroll, you are going to profit from hundreds of pips. They said things like that. You cannot 100% listen. You need to challenge them. How he said like that? How do you justify it? You need to have your own opinion to it also. Okay, so this is the thing. And then you need to consistently ask your questions. Why the past experience is really true that you can apply to your future trading decisions. Cannot, right? For example, non-farm payroll is good, but due to the latest news regarding the rising, is my voice very sorry, somebody said that the voice is very low. Is it true? Others guy, can you hear my voice? All right, so I think you can open your speaker louder lah for John. All right, okay, so I continue, yeah? So we continue. And then, okay, so we move back towards it. How can we solve the issue? How can we solve the representative bias? You are saying that the news, the first information, the new information is not good. How can we solve it? So first thing is we need to challenge the statistical error. And then the second thing is we need to encourage a broader and more objective assessment. Not only one data we need to understand. We need to understand tons of data, tons of fundamental news. It can help you to build your more diversified portfolio. You can understand more things that it might be lower your risk, because when you understand more things in the market, right, sometimes it might benefit you also. Okay, so representative bias is ask you to have not only just focus on one data, it's ask you to focus on more data and then keep challenging the latest data, keep challenging the people opinion. This is the thing that you need to understand to it. And then the loss aversion bias, I think this is a basic thing that a lot of people might be experienced, but they don't know they're experiencing things like that. Have you guys experienced like when you do trading, right? And then when you lost your trading, your equity become negative already, you lost your profit. Is there any chances that you are not willing to close your order? You just let it float and then you just lost your money only. You are not willing to understand, or now the position already changed, you need to put your stop loss and then you close your order with discipline. I think a lot of people are not able to have this kind of discipline. Some people have, it's very good, but this is something new that I want to let the new trader know. Sometimes, right, when you gain a lot, right, when you gain a lot of money from your trade and then end up the trade suddenly lose back, and then you are going to keep thinking that I am not willing to close it. I think it might be have chances that it might be rebound back until my profit region. This is a very strong thing. So when you want, you hate to, when you want to avoiding loss, this is what we call the loss aversion bias. So what is the consequences? What is the consequences when you lost, you don't want to close your position? It might be cost you a lot of risk. It might be make you suffer from the significant loss. You might experience a significant risk from your trade. When you don't want to close your positions, you might be experience a significant loss sometimes. So you need to understand this is something that emotion control your trading strategy. It's not yourself control your trading strategy. Sometimes even you set a stop loss level, when loss aversion bias come, you can keep lowering down your stop loss level and end up you might lose a lot. This is a very strong thing that I think a lot of people don't recognize it, but it's true that a lot of traders might be suffering from this kind of thing, especially when their profit then suddenly turn to losses. They are not willing to accept their losses. This is a very bad thing that you must control to it. So how can we overcome the loss aversion? So set a very clear and well-defined stop loss level for each trade. This is very important. When you stop loss, you need to stop loss already. It's not recommended for you to keep lowering down your stop loss level, lowering down your stop loss level. What is the worst is when you look at your account is negative and you lost money, and then you just ignore the account because you know you don't want to see you are losing money already. You feel very sad when you see you are losing money, so you just ignore your account. This is also another very bad thing when you want to become a very professional trader in future. So you need to control your emotion. Even you lost, you accept the fact that you already lost your money. You must close your position. You understand it, why you lost from the trade. Okay. And then you guys also have been experience like when you have some profit, you think that, oh, profit already, I must close fast. This is also another thing that linked to the loss aversion. Closing profit too fast will also lead you to a negative trading strategy in future. I think a lot of people might experience this kind of thing also. When they just gain a little bit, they lost one. Then after that, they just gain a little bit, they're afraid, then they close the order. Then end up, there will be a chance for the currency or what continue to go up, then you might gain from your buy position also. So you need to control. So you need to balance it. So how can we control? One thing is you must set a very, very straight, clear, well-defined stop loss. You should not keep lowering down your stop loss level. You must close your order. When you lost money, you need to face that you are losing money. You need to look at your negative fund, and then you might be just close your order. It's not that you just ignore it to avoid that you set from your trading loss. This is very, very bad, really. Trying to maintain a good discipline. I hope you guys can understand it. Very important, especially for new trader. And then this is the most important, overconfidence bias. I'm not sure whether have any trader have experienced this kind of thing before. Before we talk about the overconfidence, maybe let you guys have a definition first. So this is the inclination to place unwarranted faith in one's own intuition, reasoning, judgment, and cognitive abilities often lead to a self-attribution bias. Seems like a very, very typical explanation, but To put in a simple way, is explain like, or you keep thinking that your position should be make money 100% sure, your trading signal is 100% sure, you're not going to lose it. So this is how we call the overconfident bias. When you don't want to accept the fact that you might be wrong, this is overconfident, and this is very, very dangerous. When overconfident will form is when maybe you do certain trades, maybe you do 4 trades or 5 trades, and then all the 5 trades hit your TP, hit your take profit, you gain from it already. Then when the 6, 7, 8 trade come out, right, you might think you are the god of trading already. This is automatic things one. You think you are the god of trading, then you open your position very, very large. You're saying that, oh, the previous 4 or 5 position I'm correct, then the 6th position will be 100% correct also. And if you think like that, the 6 positions, there will be high possibility that you might be gone wrong because you are too overconfident to yourself already. You underestimate your ability because, right, in trading, especially trading in forex as well as commodities, the news impact are very, very huge. And then even though you are right in the past, but sometimes there will be a chance that the fundamental outlook of the certain products have changed. Then your trading strategy that you applied last week might be not able for you to apply in this week because the fundamental news already changed already. The things that you want to trade might be different. So it's very, very bad thing for you to think that the previous 5 trade I'm very, very good, then the 6, 7, 8 trade, you need to open a bigger position. This is the biggest red flag for the trader around the world. You cannot do like that because in the probabilities front, right, it's not good. Because if you already right 5 times, and then your 6th time you open a very huge position, right, there will be a chance that because of your 6th chance, you open a huge positions, you lost the money that you win previously, which is the 5-time money you lost before. So this is a very bad thing you need to control on it. So you must remember how to solve this kind of thing, right? You must keep asking yourself, you must not keep open your position bigger and bigger when you hit certain TP. As I said that, this is a very dangerous thing, especially for new trader. Some new trader might really think like, oh, I already gained from it. I'm god of the trading now. So I'm going to open a huge lot size. No matter how good you are, because of the probabilities odds, you open 5 positions correct, and then the 6th position you open huge. There will be a chance that because of your 6 position losses, your 5 previous TP level, it will lose back all your money. This is a probability front. So it's highly not recommended to experience an overconfidence week. A lot of people might experience like that. When I'm a new trader, who never think that they are the god of trader in the world? Everyone think they are the god of the trader. They understand the market, but this is the things when overconfidence come out and then it might harm you. So must control that. You must control that. You cannot keep open the position larger and larger and larger. And then you need to seek how to solve this. Another solution is you need to seek external feedback and different perspectives. When you are very confident enough, you need to try to ask other people to lower down your confidence. You say the goal 100% is buy, then you need to try to seek others' feedback that might be valid. The goal is in the buy, maybe the goal is a sell thing. You need to seek for external feedback. It's just not only listen to your own voices. Trying to seek for external feedback, then it might calm you down from overconfidence thing. Okay, and then you must stay humble and open-minded. So you must know that I'm correct with 5 trade already. The 6th trade, I cannot 100% sure I'm correct also. That's why I must be careful on trading. So I open small position size that's suitable my risk tolerance. I'm not going to keep opening bigger and bigger position because of overconfidence. You must stay humble and open-minded. So you cannot think that you are the god of trading, then you keep trading without a very good risk management. You must stay humble. It's very important to it. Cannot think you are very good in trading. As I mentioned, there is no 100% strategy in trading because it keeps changing. The market outlook are keep changing. Imagine from COVID previously until the high inflation, and as for now, rising Middle East tension. Who can able to predict it? Nobody is going to predict it. So when all these major things happen, your trading strategy must be changed. So you cannot just apply one trading strategy and put into all events. So you must understand your capability. Not 100% sure, especially in the trading world. Okay, so I hope you guys really learn from it. And then what is the benefit of learning trading psychology? This is just a brief idea, but the benefit is really huge. It can prevent you to avoid that you let your emotion control you. It will seek you to experience a significant losses. self-discipline is the most important. You can go to others' class to learn about trading strategies, the breakout, the candlestick pattern, what is the indicator good to do the trading, what is the fundamental things that we can do the trading, even though you learn all the knowledge. But the key thing is you need to understand your emotion. You must control your emotion well. If not, no matter how good your knowledge are, when emotion kick in, you are going to suffer a lot. Okay, so it can improve your decision making when you can control your emotions, and then you can adapt in changing market. As I mentioned, market will be keep changing. If you don't have the things like overconfidence, then you can understand, or you might be wrong sometimes. Then you keep finding other things that challenge your point of view, and then it might be benefit you also. Okay, and then it might be, I hope it can help you to generate consistent profit. But really, trading is the life learning journey. So we are everyone that willing to learn together. So it can help you to learn a lot. Then enhance risk management. Risk management is a key thing, especially in forex thing. If not, you are going to suffer a significant loss because forex is a high risk trading investment. If you are not going to control your emotion and risk well, it might be suffer. Okay, you guys understand it? And then while you're able to control your trading emotion, it might be help you to build a long-term success. It's not only in trading mode. When you're able to control emotion, you are not only the god of trading, you are the god of your life already. So you can able to handle everything nicely without your emotion. This is can able to build your long-term success. So imagine when you already can handle, you lost 50K in trading well already. Imagine what you can't handle in the real life. So it's not just building your long-term journey, long-term success in trading, but also your life. And then it can help you to become a better person by better emotional control. Okay, so this is a key takeaway that you guys might learn today. So continuous learning, trading is a lifelong journey. Learning and evolving your strategy is important for long-term success. So you cannot give up on learning. Everyone is learning, especially in trading world. So when traders around the world are learning the new thing, you must be learn to it also. You must update yourself also. And the other thing is emotion control, very important to it. And then adaptability matters. In the real trading world, diverse and dynamic, be adaptable and commit to constant learning is very important. As I mentioned, things are keep changing. You need to change your trading style. So you need to try to understand the market well. And then you cannot just use the old school style and then trade like that. You cannot use the COVID style trading strategy apply to now already, cannot already, because the thing already passed. You need to digest another new thing. Okay, then last, the golden rule, control emotions, not other way around. So you must maintain your discipline for sound decision making. So this is the webinar for tonight, and that's it for today. Now I'm going to open for Q&A sessions. Anything you guys want to ask me? I really think, I hope it can help you guys to suffering from a lot of losses. Losses in trading is real pain for everyone. But what to do is we must get up and learn more things. I really hope I help. And try